Okay, from any other member? If there is any query and the validation and anomaly that I can clear first, then we'll move to the next new lesson. Okay, if not, we are moving to the next lesson. So today, we will learn some new things. So VSA, just look at this picture, you will understand how VSA is working. VSA is based on the price and volume. Yesterday we understand about the price and what is volume, and what is the validation and anomaly in the price and volume bar. So components of VSA we understand, and introduction of VSA we understand. Now we are moving to the stages. These stages have 4 main topics: accumulation, markup, distribution, markdown. And these stages show that if the trend is going in up direction, so what's the reason? If the trend is going in down direction, what's the reason of going down? When trend start from downtrend to uptrend, so what's the reason? Is the reason is true or false? If the reason is true, we can buy and definitely it will go up. If the reason is not true, then this trend will go in a 2 minute or 3 minute, it will drop again. So this reason we will understand. So Wyckoff suggests us that always look for the cause of the market. When market moving in any direction, you just to understand is the cause is true or cause is false of the movement of the market. And there are some words which will be changed in the VSA from the price action. As in the price action, we are saying uptrend, downtrend, pullback. This type of words we are using in these terms using in the price action. But in the VSA, some words, some terms are changed. We must understand these things. Okay, so stages now we are going to start. If there is a question during the session, you can ask, okay? So it's important I can clear you during the session. Don't wait for the end of the session. So just to understand what I'm drawing here, we are coming from the downtrend. It's showing the market is falling down. And sometimes we see this type of movements going up, again market moves down. So now we are consider here that this is the end of the downtrend. After end of the downtrend, we found here a disturbance in the higher high, higher low. This type of movement, the ranging market we are finding before the trend new is starting. So this market started from here, fall down, goes down. And in the price action, we are saying this is the price downtrend. This is a downtrend. But in the VSA, we will say that is a markdown. And in the price action, we are saying this is a little range or consolidation area. But in this VSA, we will use the term congestion. When the market congested within 2 levels, touches, moves down, going up, touches, move down, we will use the word congestion. So that is a congestion area. In this area, the trend is developing. The new trend is developing or the previous trend is testing. So we can say that this area is also testing area. Testing. So you know that in this market there are 2. Hello? Okay. In this trade there are 2 parties. one the buyer and one the sellers. So sellers and buyers testing each other. So if the sellers are powerful, they will continue more down. If the buyers are powerful in this congestion area, the buyers will move up. So here in the price action, we can say that is a demand zone. In the demand zone, market is making a demand, and after completion of the demand, then market will move in up direction. But in the VSA, we will use the term at the name of the demand, we do use accumulation. So accumulation is same as a demand. There is no difference. So now this area is accumulation where the trend is developing, the demand is developing. It means the sellers accumulate the buyers. Sellers, they are exchanging their opportunities to the buyers that now you can go up. So what will be the volume bars movement you will see in this area? That is the peaks of the buyers you will see in this congestion area. These type of peaks you will see. Look at the here. And sellers volume you will see in this area like this one. So it's very clear in the visual picture that the peaks of the buyers are stronger than the sellers. So this development of the uptrend, and in the VSA language, the development of the markup is a true, because this congestion area showing that buyers are getting strong. And when the market moves up from here, when it's broke, it will retrace. So that is the same concept of the price action will appear here. The breakout of the level, market moves up, it will be retraced, and then market moves up. So after that, a pullback appear. Always you are looking for the pullback in the price action. So this pullback, when unfold, the market will move up. Here now, look at. When the market from this area moves up, so this area of the movement in up direction, we will call the mark up. These are the basic things you just to understand. But in the price action, we are saying the uptrend, minor uptrend we can say. But in the VSA language, we will say that is the markup. So in this area, when you see the pullback is happening here, this is the pullback area. In this pullback, when market again crosses this level, so here we can use a term reaccumulation. It means the demand again formed to go up. So now this area is a reaccumulation, but in the price action, this area is a pullback. So again, you see that the market moving up. So now this is again a markup. We just to remind that when I say the markup or markdown, you can understand I'm talking about the downtrend and uptrend. When I say the accumulation, you can understand that I'm talking about the demand zone. So in this education, we must understand and must use these words which are using in the VSA language. And after this course, you can use this course in the Forex market also. Just the candlestick time frame will be changed, but the information is same. There is no change. Okay. So this picture I'm going to save. I will share with you.
Sir.
Yes.
Sir, in that reaccumulation area, how do we find that it's grow up or down, sir?
Yes.
In accumulation area, you clearly told that bars are increasing.
Buyers are increasing. You will see that the peaks of the volume yes, bars are from the buyer side, they will be higher than the sellers. They will be higher than the sellers. That is a clear sign that the buyers are stronger. But sometimes you will see, sometimes you will see these type of candles. So I'm sharing you. Okay, good question. Here, this one. Sometimes you will see these candles. Okay,
Okay.
but the volume is increasing also. Volume is increasing. And if the volume increases on these candles, this peak is from the buyer side because the candle is weak.
Okay.
Candle showing the bias pressure. So sometime in this testing area, you will see the peaks, higher peaks in the bias sellers candles which have a lower wick, higher lower wick than the body. So this type of volume bias you can consider that is a from the buyer side. So this example I'm going to show you in the
Yeah.
chart. Okay.
Okay.
Then we move to the how to change the uptrend to downtrend. So brothers, this in this picture when I show you some illustration, that is a concept. It's not necessary that that concept you same as to same you are matching with the chart. No, but you just understand the concept and concept you are looking in the chart. That is very important. But this illustration is not important. That just concept I gave you. So here, so this trend is starting from here. Okay, is it what I teach you, the same thing you are showing here. Look at, in these bars, do you see the buyer's wick is greater than the seller's? So these all the things are matching to each other, but this wick is greater than from the sellers. And after downtrend, you see the accumulation, a breakout. After breakout, you see the retracement and market moves up. The same thing. You just to understand in this congestion area, who is stronger? The buyers are stronger or the sellers are stronger? In this candle, the red candle, the volume is from the buyer side. So buyers are more stronger than the sellers in this congestion area. When the breakout happen, here the breakout happen, after breakout you have to wait to confirm that. If they make a retracement on the level, then it's confirmed now they will go up. You can make a strategy on this congestion, accumulation, and reaccumulation area. So again, you see there is a reaccumulation. So in this reaccumulation, from here to here, you see the buyer's volume is greater than the seller's volume, and they are moving up. So this we can say that is accumulation, that is a reaccumulation. And in the pricing, we can say that is a pullback area after a trend. So is it clear about the accumulation and reaccumulation? I'll show one more example. So here again, look at the market moves down in this area. You see the buyer's wicks are, the peaks of the buyers are stronger than the seller's peak. So this is candidate is from the buyer side. It's not from the seller side because there is a rejection, huge rejection from the buyer side. So peak is higher. Again, you see the buyer volume is higher than the seller volume. Again here on the breakout candle, the buyer volume increased. So this congestion area, this accumulation area make a sense that the buyers can continue. So sometime when they again not reach to this level, maybe there is another level. Another level they can retest and then can goes up. So this is just an idea. But after here, if they want again, they again goes to weak, then the trend can change. But this is the call. So now we understand the one rule of the VSA. The rule is what? That is the rule. So I'm asking here, this cause, this result because of this cause. The cause is buyers are stronger in this area. So that is the result of this cause. So if the cause is true, then market will move up. If the cause is not true, then market will not move up. So this example you again see here. Do you see in this little congestion area, the buyer's peaks are not stronger than the seller's peak? So here the seller peak is stronger, the buyer peak is not stronger. Market moves up for 2 to 3 minutes, again drop. Market moves down, goes up, again down. So why in this little congestion area, the buyer's peak starts showing the results. So that cause of them going up is a false cause. The market will move down. In a few minutes, 3 to 4 minute market will move down. So we must understand this cause. When the market is moving in up direction or down direction, we must understand the cause. So in this cause, now you understand here. Look at here. The market is coming from the uptrend, the minor uptrend, and that is a congestion area. So buyers and sellers test each other. You see in these 3 to 4 candles, a breakout candle, the seller's peak is greater than the buyer's peak. It's clear. When they are greater, they move down. So this cause going down is a true cause. You can trade. So this accumulation and distribution. So that is a distribution. But we will learn in the illustration first, then we move to the distribution. So here now we are talking about the distribution.
Sir,
yes.
Sir Abdul Muiz, can you go to IQ option? Where were you explaining about accumulation and distribution?
Yes.
Sir, here on the bullish engulfing.
Yeah.
Yes.
Okay.
And the third candle where market reject na?
Yes. Here.
Yeah. Here first green. Before red.
Before red, there is the first green, I think.
I request you for authorization. Can I make third one?
So
yes, this one, the green one.
It will be controlled. No. Okay, so you are talking about this candle. Am I right?
Sir, third one.
This one? Yes.
Yes, sir, this one.
Yes.
Sir, I want to know why this candle reject, because it didn't touch the level and there was no previous level. Can you please explain?
Yes. Okay. This candle is rejected because before the buyers started from here. Okay. Again rejected from here.
Okay.
So sellers are here now. Okay. So that is a sign that sellers are here. Also, the rejection of the candle is showing that there is a sellers. So if you go in the past, you will see there is a level. So this area is a level in the past. If you go, it will show you there will be a level. Okay, so this is a demand zone. This is a demand zone area. So that's why this candle is rejected. Because before you see there is an action. Okay, and for this action the market is rejected from here, and another thing is here, which will be the next topic. Other after some time I will give you the topic. So that is the breaking of the sequence in the candle. In this sequence, the buyers broke in the sequence. So market always move with the sequence. So why the sequence is important? Yes.
Which you were explaining on tomorrow, yesterday's query classes.
Yes.
Q&A class.
Because you know that I'm talking on the sequence, so everything have a sequence. If you are looking at the birds when they fly in the sky, they have a sequence. The fishes moving in the sea, they have a sequence. When animals go, they make a sequence. Even flowers grow, the plant grow, they have a sequence of leaves. So the market always is moving with the sequence. Why it's moving with the sequence? Because it's running with the human mind. So human mind follow the sequence. If the sequence is broken on the support and resistance level, the market will reverse. That is the main thing. That is a later topic I will teach you, but we are just now talking on the accumulation and distribution. Okay, so this will be clear.
Thank you, sir. Thank you.
So we are coming from the uptrend. Here we see the trend is over. So when the trend will over, after this accumulation and distribution phase, I will teach you. Okay, how to understand that the trend is going to over. This is the end of the trend. That is the next topic. Okay. So that is the end of the trend. The market making a range. This type of range you will see in the market. After making a range, any chart pattern will appear in the market. So this area will be in the candle shape, there will be the chart pattern. So that is called our testing area. And the trend is developing. When the trend is developing here, it can be accumulation, it can be a distribution. So when here the market making a sense, it can be a distribution, it can be a reaccumulation. But at the end, when it crosses here, so now it's confirmed that that is a reaccumulation. But here we can again say, if the trend again goes up, so we can say that is again reaccumulation. So reaccumulation can be formed 1 time, 2 times, 3 times, 4 times, 5 times as per the trend. But the sequence of the market is saying that the reaccumulation can be formed 3 times, because the Elliott wave is suggesting that the market can move in the impulsive only 3 times. Sometimes you can see the 4 times because of any news, because of any event, any strong uptrend. But here we can say that the 1 time the reaccumulation can form, the 2nd time can it be formed, but it's not necessary that all the time 1 time or 2 time or 3 times you see. Sometimes you 1 time see, the 2nd time the trend will make a distribution and goes down. So here on this area, the market make a development, and that development is for the distribution. Distribution is a supply, which we are using in the price action. So this area we will call that is a distribution. And distribution, before in this congestion area, the buyers and sellers, they testing each other, who is stronger. After testing, you see a breakout. And there is a trend. In the price action, we are seeing that is a retracement. But in the volume analysis, you can say that is a spring. So spring is the same thing, like a retracement. So we are not using here spring, it's not important, okay? So we are just using the testing distribution. Now it's confirmed that it's retested and goes down. Here it's confirmed as redistribution. So this area is a redistribution. This is the structure of the market. And the same thing, now we are moving to the chart and I'll show you. Then after that, I will give you understanding about the market structure, how market is making a structure, how the downtrend convert from with the uptrend, and how we can understand this is the end of the trend, start of the trend, middle of the trend. So these things we will learn on that end of the slides, okay? So here. We are taking any downtrend area, so that is a downtrend area. We are looking this whole area, okay? In this whole area, you will see and you will get idea which peaks are stronger. So from here to here, from here to here, and this area is what showing you. You just look at and you will get an answer your own. Which peaks are greater? Can anyone tell me?
Sellers, sir. Sellers.
So is it clear cut? So the uptrend will not start from here again. It's clear that market is making the sellers and buyers testing each other. So all the time the sellers are stronger, the buyers are not stronger. Then we can expect that market in the near future will drop down. So always looking at the congestion area, at the ranging market, at the ranging area, the little range, sometimes consolidation, the consolidation, little range, that is all the congestion in the VSA. So that is the cause of the downtrend. Is it true? So this cause for the downtrend, is it true or false? Tell me. Anyone tell me?
True.
It means that this result of the market happened because of the cause. The cause is that the sellers are stronger, buyers are weak. So now you understand that how the trend is developing with the VSA. Any question?
No, sir. Yes, understand.
Okay, I understand. So now we are moving to the understand that how the market structure we see in the market. So market structure to understand is very important because VSA will not work without market structure. You will never understand the signals without market structure. Okay. This accumulation, markup, distribution, markdown, these topics are clear. After market structure, then we'll move to the application. So all the information already shared with the students, but they are not paying attention that how we can understand the market structures. So look at here. There is a Dow theory. Well, yesterday on the theory session, I talked about the sequence. So that is the sequence in the BMW strips. So Dow suggests about the sequence, that market makes a sequence, and this sequence is made by the people's, the public participation. In this handles, you see that market making a sequence. Also, if you see, look at the fractals give you idea that if the middle candle have a high and the left two candle and right two candle is lower than the middle high, so fractal will give you a arrow here. It's showing that in this 5 period, this period is a high, and it can act as a resistance, it can act as a supply. Everything can be happen in this area. So this is a sequence. His second concept is that market is said to be in uptrend when it makes higher high and higher lows. How we can understand higher high, higher lows? So this is the example of uptrend. Look at, this is a swing point low. It means before there was a low point. The sellers was there before, and this is the low point. There is no other low point from here. This is the first low point, or last low point we can say, and that is the first high point. And now that is the market moving down and make a higher low, because this is a lower low. This is the last lower low, and market make another low, but that is our higher low, because this higher low followed by the lower low. Now market moving up. The trade start from here. Market moves up. It's make another higher high, and this higher high is followed by this swing point high, the first high. So we can say that is the first impulsive wave. This is the first impulsive wave. If the first impulsive wave appear in the market, we can expect the second impulsive wave. So the green bars in this chart, they have an impulsive wave, and the red bars, these type of, have a retracement, pullback, or corrective. So when the market moves up, it make a higher high. When the buyers show the weakness in this trend, here buyers show the weakness, then the sellers enter. Sellers try to go down, but they unable to go more down, and they don't broke the level of the last swing point high. When the last swing point high level is not broke and market again moves up, so it can be expected that is the second impulsive wave. The second impulsive wave moves in up direction and broken here. So again you can confirm that market will move up. Sometimes when it's broken the high, it will make a retracement, then again goes up. So when it's make again a higher high, this higher high is followed by this higher high. So the one swing point high, the two higher high you will see in the market. This is one, this is two. The third is the last. After that, market will move down. Again, a corrective wave formed here. This corrective wave are showing it's not breaking the last higher high. When not breaking the last higher high, it means the market will not move down. It will go up and the third impulsive wave will appear. So the three waves appear. Now the concept appearing here that now the market will make a range market or the distribution area or the reaccumulation area. So after three impulsive waves, you will see the accumulation or reaccumulation, reaccumulation or distribution area. But if the market again crosses, then again count the three impulsive waves. If market moves up, so again count the three impulsive waves. 1, 2, 3. So that is the process, that is the sequence of the market. So now, how to understand that this is the last third impulsive wave, or that is again market will continue. Look at here on this example. So you just to understand and you tell me, you will understand very easily. These are the three impulsive waves. The third impulsive wave is stronger or the weak. Can anyone tell me?
Weak
Yes.
from previous two waves.
So what's suggesting? The momentum is losing because first
Yes.
buyers have a strong, then they're getting weak, again they're getting weak. It means the trend is near to end here. Am I right? And if you see like this one, so what you expect here? Can you expect the reaccumulation here? Can you expect that the reaccumulation can be formed? Again market will goes up, make a little range, and then again market will goes up. Just to take a difference in this first example and the second example. It start with the weak, get powerful, again get powerful. So it can lead again a market can move up. But this cannot lead the uptrend again, because in the third impulsive wave we see that the power of the buyers is losing. The market will make a range, and that range is the distribution. The market will break and goes down. Is it clear? Hello brothers, is it clear?
Yes, sir.
Yes, sir.
So now you are very dear to understand the market structure, because uptrend you understand. So how the uptrend can form, okay? At the next stage, the same thing we will follow in a downtrend. You see the lower high, this is a swing point high, that was the first, because before there was an uptrend. Before there was an uptrend. That is the swing point high. After that, when market moves down, it's broke any level, and then it's make a lower high. So that is the trend start from here. Market moves down, it's a confirmation here. This is the last low point. So that is the confirmation trend started. This is the first impulsive wave for the downtrend. Market moves up, not broken the level of the swing point low, make a lower high, market moves down. Again, market moves up, not broken the level of the lower low, and goes down. So now these are the three waves are completed. And maybe there's a cause the market moves up now, make a range, it's make a distribution area, then it moves up, make a again a retracement, then again make a reaccumulation, market can move up. So that is the structure. So now on the next slide you will see how the trend changing market structure. Look at. When the trend is going down, that is a lower point, lower low. Now pay attention here. This is a lower low point. Market moves up, not crossing here, okay, or crossing little bit. We can expect the false breakout. After that, when market moves down, it's not broken the lower low. It's make a lower high and market moves up and broke the last lower high. That is a confirmation that the uptrend is going to start. When market moves up, goes down, retested level, market moves up. Now the impulsive wave start from here. 1, 2, 3. Is it clear?
Yes, sir.
Look at the same thing in the chart. Is it market moving down? Downtrend? Now the trend is changing the direction. Look at the trend change the direction. It's retested. Market moves up, again goes down, again goes up. So trend is changed from downtrend to uptrend. And you see here, in this area, the buyer's peaks are higher than the seller's peaks. That's the cause of the market is moving in up direction. Okay. So in these slides, there are some strategies you can use in the VSA also. Look at here. Trend change from uptrend to downtrend. This will be the happen. Okay, Mark, our meeting is going to be finished here. I think 2 minutes remaining. We just, I will send you the another meeting. Here, the market is in an uptrend. It goes down and then not make a higher high again. It's make a lower high. Market moves down. Here it's confirmed. Then you can place a 5-minute trade. It will goes down. For 5 minutes, it will surely goes down. This is the pattern number 1, and this PDF I will share with you. The pattern number 2, same thing. You can understand. 3, 4, 5. This is a 5 pattern. The trend uptrend to market changing in the downtrend. And for the sellers, for the downtrend when market changing in the uptrend, this type of formation you will see in the market. These are the most famous patterns in the market. This is called the M and W patterns. And in the price action, you can say that these are the double top and double bottom patterns, and sometimes triple top, triple bottom patterns. It's very easy to understand. Just to follow the breakout and the retracement. The breakout retracement is a very important in this strategy. And every strategy, because every time you will see the breakout with the candle, with the levels. So after breakout, it's due that the market will make a retracement. If you don't wait for the retracement, always you will lose. You wait for the retracement, it's confirmed, then market will give you always winning trades. Pattern 2, 3, 4, 5. This sheet I'm going to share with you. And now I'm sending you another ID. You just to join me, and we are going to the application. Okay.